Asian markets surged ahead today on sentiment that trade talks between Washington and Beijing would likely be positive. A new agreement between the UK's Theresa May and European Commission also buoyed spirits with the pound rallying. However, it remains to be seen whether May's latest divorce agreement will get the thumbs up from a parliament vote later this evening. In Japan, the Nikkei share average rose a convincing 1.8% to 21,503 points. Hong Kong markets closed up firmly with the Hang Seng Index up 1.5% at 28,920. Now, Chinese sentiment was also positive, although gains were crimped by ongoing concerns about that economy's growth prospects. The Shanghai Composite Index ended the day 1.1% firmer at 3,060. US stocks market jumped on Monday as the technology sector led a broad-based rebound after 5 straight sessions of losses. The Dow's advance was limited by a fall in Boeing shares following a fatal airline crash in Ethiopia. The Dow Jones Industrial Average rose 0.79% to 25,650.88. The S&P 500 gained 1.47%, 2,783.3, and the Nasdaq Composite added 2.02% to close at 7,558.06. Now, for more on the markets, we cross to Arabile Gumede. He's at the Johannesburg Stock Exchange. Lots of red on your tie and in the board behind you, Arabile.
Yeah, certainly a whole lot of red going on today, isn't it, ladies? Well, look, it has been quite an interesting day across the market picture when one takes a look at the sense of earnings and the amount of news that has come out. One would have hoped that the positivity out of Asia that came out this morning would certainly filter through into the local market, but it clearly hasn't. Around 0.5% down for the most of the market today. Only the gold counters seem to be doing fairly well, up there almost 1% as well when one takes a look at how things are faring on that front. But the likes of First Rand coming out with earnings, the market not hating those results, but certainly not bringing out the best in the company. And we'll discuss Group 5 as well in just a bit. But for now, let's unpack the rest of the European and global markets, and we'll get into the numbers here locally in just a bit. Well, that market picture across the board is clearly giving you a slight sense of negativity there, as you can tell on the local front. But internationally, things are looking a whole lot better. So let's discuss the whole market now. Chris Gilmore, independent analyst, joining us. Chris, thank you so much for the time. Slight sense of negativity today, around 0.5%. But really, across the year, things haven't necessarily gone in a particular direction.
Do you know, Arabile, if you look at the S&P 500, which tends to drive equity markets all around the world, that bottomed out after having had a huge fall at the end of last year, bottomed out on Christmas Eve, and it's had a huge run. It's struggling now to get through that psychologically important 7,800 barrier. Just can't seem to get through it. And, you know, I'm not necessarily a believer in technicals, but if you look at it, it gets up there, tries to get through, comes back. US corporate earnings haven't been that wonderful. Been okay, been all right. But Saturday marked, the 9th of March, marked the 10 years since the start of the current bull market. Are we even in a bull market anymore? You know, it's a good question. So you look at that international background, it's not particularly conducive. You know, it's tired. The bull market, 10 years, it's the longest we've ever had. Not necessarily the most robust, but certainly the longest. And it's showing signs of strain, showing signs of strain in America, in the Far East, wherever you look. Yeah. And South Africa, which is decoupled, you know, from that, the rest of the world in many ways. Also, you know, we said off here, it's a bit like Groundhog Day. You wake up and you look and you see the market, whereas it's exactly where it was the day before. There's hardly any movement. It's going nowhere slowly.
Yeah, it's easy though to be negative. Surely we can find some sense of positivity in the market.
Well, you know, if you talk to a lot of the fund managers out there, there's a growing sense of optimism amongst many of them. And I went to the Jeremy Gardner presentation last week from Investec. That's one of the most bullish things I've seen in years and years and years. Oh. And a wonderful presentation. Got to give it to him. Absolutely fantastic. But if I look at the fundamental reasons for that optimism, I struggle to find them. Because the rest of the world looks like it's peaking out in terms of fundamental economic growth. And the markets look like they're topping out. So locally, you know, I have never seen a situation in our economy this bad in decades, in absolute decades. You look at the construction sector. It's bombed out. Retail, bombed out. Fast foods, you know, it's difficult to find a sector that's really doing well.
And if you mention that construction sector, you just take a look at Group 5 and you don't have to go really that far. Now applying for business rescue, there's a complete capitulation in South Africa's construction sector as well, isn't there?
The only one, the last man standing, so to speak, was WBHO, and their results came out the other day, and you know, the CEO gave a wonderful presentation the other day, and he actually apologized, and it was a heartfelt apology, because they really felt that they'd let everyone down. Group 5 have been in the doldrums for a while now, so it wasn't a surprise. Basil Reed's gone. Avenge is looking kind of shaky. They're all looking very, very shaky indeed. And what I find interesting, Arabili, is that until very recently, and in fact maybe even still, we hear government talking about this wonderful infrastructure, the development that's taking place. Well, I would like to know where it is, because it certainly isn't affecting the order books of these construction companies.
Yeah, they're seemingly going on a downward trajectory then. One sector that is perhaps trying to survive and trying to find other ways to make it is the banking sector.
Yeah.
So earnings come out of First Rand. Perhaps if you take a look out of all the banks that have reported thus far, it's probably performed the best.
Yeah. Look, it's very special. If you look at the return on equity, 22%, that's way above anything else in the sector. 7% earnings growth, not fantastic in the overall scheme of things, but relatively speaking, very, very good indeed. And I think this speaks to a reasonably large degree of entrepreneurship, albeit, you know, within a large corporate. There's flair in that company, and it's been there for quite a while. And even although I think it was Michael Jordan that started it, he's passed on to the new guy.
Yeah.
And you know, it's Mr. Saliers, and it's, you know, it's in a different league, I think, to many of those other banks out there.
Yeah, and I mean, they're able to get the most out of different segments at different times, right? I mean, yes, West Bank isn't necessarily performing that great. RMB may not necessarily be performing that well as well when it comes to corporate and investment banking. But if you take a look at the likes of FNB, despite a weak consumer, you know, economy right now, they're still able to get the most out of those little tidbits that the consumer relatively wants, particularly when it comes to their mobile app. Are other banks just lagging behind because of things like innovation right now?
I think they are. Look, if I look at many of the other banks, no names, no pack drill, but many of them have been able to pick up on technology, but they failed at the execution stage. And I think that's what differentiates First Rand. They see it all the way through from innovation, design, execution. And that is critical. You've got to be able to execute with a client. So, for example, I can think of one bank, again, no names, no pack drill, that 10, 12 years ago, Tap and Go, they were right at the forefront of that technology. How often do you ever see Tap and Go in South Africa? Whereas you go overseas, it's all the rage, and has been for many, many years now. And that bank had the opportunity, and they dropped the ball, you know? So I think First Rand has just not dropped the ball. They're a super operation.
Yeah, going to be interesting to continue to check out on that one. Very quickly, that Rand picture, 1429. We keep talking about a little bit of strength here and there, depending on what happens out in Brexit, but that dollar strength is going to be one to always look out for, isn't it?
Yeah, look, dollar strength, I don't think it's going to be with us all year. It's going to vary quite a bit, and obviously a lot depends on the success or otherwise of the trade talks between America and China.
Yeah.
But again, you know, that U.S. economy, it's peaking out, you know. So the dollar, I think, is going to start weakening during the course of the year. And again, I think that's probably why some of these fund managers to which I referred earlier are starting to get bullish on emerging markets generally, and South Africa specifically.
We really hope that bullishness actually comes to fruition and certainly helps the South African market as well, especially when you take a look at how the JSE performs too. Chris, appreciate your time. Chris Gilmore there is an independent investment analyst as well. So that market picture, sense of negativity coming across the board there. The Rand not performing as one would have liked, but there is some strength coming through from the British as well. So we'll continue to unpack that market picture, but for now, that's where the buck stops. Over to you, Nzinga, right after this.